Hey everyone, this is Derek from optionboost.com. I just wanted to highlight a few trades that I'm looking at today. I'm actually in a few trades, taking advantage of some of the bullish action today in the S&P, and well, from the past quite a while now in the S&P. I did want to wait a little bit until I got a little more of a pullback. I was looking for around the 21-day moving average coming up before I got into any long positions, but in terms of these longs positions, they're not really a high risk type of a long, and I'll show you what I mean. Basically, I'm looking at the one I just got in was McDonald's, and I see a little bit of an overreaction, a little bit of a sell-off off of well, what was pretty good earnings, and I'm seeing it coming into a level of support. What I usually like to see with this type of thing is when a stock has a nice uptrend, when this, in terms of this stock, it's 50 is over its 100, it's pulling back into the lower Bollinger Band, and I usually like to see implied volatility a little bit priced above historical volatility, a little more than it is in McDonald's. In this case, it's basically the historical volatility today is at 14.9. If you go and you look at the options for March and the options for February, they're sitting right at about 18 and 17%. I usually like to see a lot more of an overpricing and implied volatility when I want to do this particular spread. But in this case, I'm not going to wait around for that. I'm just going to go ahead and jump in and take this shot. The shot that I'm taking is I am doing a bull put spread at the 95 strike. So if I basically sell a vertical at this 95 strike in McDonald's, that's going to put me at basically profit above on expiration, on March expiration. If the stock is anywhere above 95, I collect the full profit. And I like this trade a lot, especially since it's pulling back into a nice level of resistance, and we're in a nice trend on the S&P. I do see, this possibly heading up quicker than most people expect, but we'll see. Okay, it's a lower risk trade, meaning that I've got my big red box here, and if the stock closes below there by March expiration, I'm going to cut the trade. I'm going to cut the trade at half of my full amount of risk. So basically, if I risk $200, I'm going to cut it if it goes under $100 loss. That's basically how I treat these bull put spreads. I actually have another one, another bull put spread in the euro, and this is the euro. This is the ETF for the euro, the currency shares Euro Trust. And what I see with the euro, I like the pattern that I'm seeing here. Here is a 4-hour chart. And you see basically like you're doing nice price swings. We're going back into a level of resistance. We pushed off of that level of resistance, and we're doing a nice swing in the 15-minute chart as well. So basically I'm looking at this and I'm seeing we just come off of a fib level. If I take this as the last fib, we're right off of our 50%. We're moving higher. This is a 15-minute chart. Going back to the 4-hour chart, we're pushing off. We did our swing, and now we're pushing off of this 21 again, and we're getting ready to test probably the 5 or the 10 EMA, and then hopefully I want to see a little bit of a jog higher. If you look at the daily chart on the euro, we've been in a nice solid uptrend, and we're kind of revisiting these MAs up here, and possibly this higher Bollinger Band before maybe doing a little bit of a retrace. But we're hugging along. This is the 5 EMA, which I like to use on the daily chart. We keep pushing off of it, and we're starting another little push here. Basically, the bull put spread that I have in the euro is if the euro closes below 127, then I'm out. Okay, so thanks, and we will talk to you soon. Bye.